I would say most people overestimate how much money they actually need to quote unquote retire early or just retire. Even if you have, let's say, $1 million in your account at your retirement, a lot of people think that, hey, I just live off of that and see how far it gets me. To me, that's one of my biggest fears is running out of money, especially when I'm in those retirement years. Today, I'm going to show you a strategy on how I'm allocating all of my finances and then also how I'm producing an income during my retirement years. And if you just drop a comment down below on today's video, I'm going to give you my personal retirement guide, which is going to take all the content in this video as well as additional content completely for free in an ebook format as well as checklist. So if you want that full guide, drop a comment down below on today's video, hit that like button, hit that subscribe button, and of course, I hope you are having a God blessed day today, guys. Let's talk about it and let's go over the shoulder. Firstly, to show you how I'm breaking this down for myself. This is exactly what I'm currently doing right now with all of my finances. I believe in simplicity here on the channel. So if you found me, welcome, right? Simplicity scales to me. Boring scales, in my opinion. Automation scales. The second you start introducing all these complexities into your life, like side hustles and businesses, which most people are, 99% of people are not prepared for what it takes, right? I try to simplify this stuff. I believe 99% of people should stay at a high-paying job, work up the corporate ladder, jump from job to job, year after year, increase their pay is the fastest way to make more money, in my personal opinion, okay? But with that said, you obviously need to break your stuff up into certain buckets. This is how I'm personally doing them. You obviously need to go speak to a financial advisor or figure out your own goals for yourself. This is just what I like to do. So let's talk about it. Let's say we did have $1 million right now, magically popped up. This is how I would allocate it. Okay. The first one is my Ark Options Strategy. Okay. I'm going to allocate about $400,000 to this because this is how I'm actually going to generate income. This is how I'm actually going to get a paycheck every single week. And I'm going to go into that in just a moment here. But a majority of my money, I would be there because I need to make income. If I only have $1 million to live the rest of my freaking life on, I need to make money because I need to buy groceries. I need to take care of my wife. I have to take care of my 3 kids. And most importantly, I got to take care of Aspen, all right, my little dog. But jokes aside, with that said, I need to focus on making money, right? And retirement, I'm not trying to work, right? So I think we're all on the same page there, okay? The second thing is my dividend, ETF, and REITs. This is my second largest bucket. This is going to be dividend paying stocks, right? Safe dividend paying stocks, not these, 10, 12% dividend paying stocks at all. These are going to be most likely all sorts of dividend and ETFs. If you want my full Vanguard portfolio and how I allocate all this stuff, drop a comment. That ebook is going to list out all the different funds that I'm currently investing in every single Monday that covers REITs, ETFs, as well as dividend focus. This portfolio, I'm not talking about single stocks here, okay? I want to preface that. I don't personally believe most people should be investing and buying and holding individual stocks. I don't. Now, there are some cases where you might have whatever information that you have and you want to be a buy and holder. Like, for example, one of my buy and hold stocks that I lump into this bucket, even though it's a little higher risk, is SoFi. I do buy and hold a little bit of SoFi every single week. I buy a little bit of it. I'm a very big believer in that stock, right? As well as Arista, when we do see big drops, I'll buy a little bit of it every single week. Now, I'm not putting those on the line, as you're going to see here in a second. I'm just buying and holding them. But most of the time, I'm sticking to my Vanguard funds that are covering my REITs, they're covering my ETFs, they're giving me diversification and giving me dividends as well, all of which is currently just being reinvested. But obviously in the future, I'll be able to take that in as income as well, that portfolio is taken, or worst case, I can take some of that money out. Most likely though, this is going to be the money, at least in my personal opinion, this is my money that I call it legacy, right? This is the money I'm just going to give away to my kids, right? My house, all my other assets, that's just going to be given to my kids because I don't need this. I'm never going to need to touch this money. I'm going to be honest with you. I'm not going to ever need to, because obviously I'm going to have other places that I'm going to be generating income from. And there's really never going to be a need for me to take from my buy and hold portfolio. I genuinely mean that. I've never had to, and I most likely never will touch that money ever. I'm going to hand that down to my children, and hopefully they do something smart with it, as long as their pops teaches them, right? But with that said, next one is my emergency fund. I don't do a traditional emergency fund like most people do, okay? Most people just hold it in like a savings account and then they just, have like 6 months. I think you need more than that. I'm going to be honest with you guys. The whole Dave Ramsey, have like 3 months. It's not enough. Listen, life can come kick you in the face faster than you know it in a blink of an eye, right? Emergencies can happen, medical issues. Something happens to a friend. Something happens to a family member, right? Something happens. I believe you need a lot more money than you think you need in an emergency account. That's just me. Me personally, I always want to have at least $100,000 in my high yield savings account. That's my emergency fund. High yield savings account, dime a dozen. You can go anywhere. American Express has a really good one that I really like to use because it's quick, it's easy. I can transfer in and out of it real quick. SoFi has a fantastic one I'm actually using as well right now too. So it doesn't matter which one you use, but again, we're getting around that 4% a year. About obviously that number is fluctuating. That's where we're getting some additional income from that. This is the emergency fund. I mean, think about this, guys. This is the money that you're going to use in case of an emergency. It's very important. If you're young, you're like and naive, like I was for many years, I didn't have this stuff. You don't think it's going to happen to you, and then it's going to happen to you, and then you're going to be kicked in the face, and then you're going to realize, oh crap, I should have had something like this. Okay, so in all seriousness, high yield savings account, big priority. Next one, I also have a large chunk in T-bills and short dated bonds. Right now, this isn't sexy, it's not fun, but it's safe. Okay, it's safer than the other strategies that we're talking about. Okay, this is we get a little bit more of a jump here, usually a 1 to 2%, not really 2%, but a little over 1.5% additional APY as compared to just keeping it in our high yield savings account. And I'm usually playing with around $100,000 in my T-bills. And I'm usually doing short dated stuff here as well. 3 months, 6 months, getting a little bit more. Rarely am I going out for the really long stuff. It is a little bit more manual work, but in my opinion, I don't really care, to be honest with you. That's just kind of like what I like to do, because I do enjoy being a little bit more active in my finances, but there's nothing wrong with pushing it out for like the yearly or whatever. But with that said, this one is actually, I shouldn't have legacy. I don't know why I typed that in there. It should have been another one. But the next one is the fun bucket. Whatever, do whatever you want with this, right? I do think, especially if you are like want to be like a little bit more of an active investor and have some fun in the markets and stuff like that, I do believe you should have a little bit of your portfolio, especially if you have all your other bases covered. Have a little bit of fun. All right, I do believe that. Right now, I'm not saying MSTR fun, but I'm just saying, like, for me, it might be like, okay, I'm buying a little bit more SoFi. Maybe I'm doing some more buy rights. I'm doing some more some more risky, buying option strategies. I know that's a crazy to say, but sometimes you want to scratch the itch a little bit, and you want to just have a little bit for fun. This is honestly where I would lump in crypto. Me personally, I've been out of crypto since it hit 6 figures. I don't care about it. I don't necessarily want to be involved in it. I don't give a crap about it. Right? That's just me. Sure, I'm missing out on gains. I don't necessarily care. I've been an investor in it since really. Man, I was in the BitConnect era, guys. It was really when I really was starting, and like I've just kind of always got lapped up into just stupid things that I did with that. But that's a topic for another video. But this is where we can toss in some crypto. We could do some private investments, some whatever you want to do. High risk, high reward plays is basically that. Now you don't need it. Honestly, you probably shouldn't. But again, for me, I like to have a little bit of fun when I can have fun. All right. Now, so let's talk about the meat of this video. Now that I've been talking your ear off for 10 minutes, how do we make an income through this? How do we actually get our money to make more money without it just sitting here? How do we actually write ourselves a paycheck on a weekly basis? Well, if I'm playing with $400,000, I'm in my 70s, let's say 70s, even 80s, even 90s, right? I am going to primarily be focusing on running a weekly wheel, and that weekly wheel will most likely be SPY, okay? And I will most likely be going all in on SPY every single week. Is it crazy? Sure. But in my opinion, it's not, as you're going to see. So let's talk about it real quick. So right here we have SPY, and I'm going to go to the trade options section. I'm going to click sell, put, and then I'm going to just go out to our next weekly, and that is in 6 days from now. I know I just went through a lot of stuff. All I'm saying here, guys, all I'm saying here, fam, is I'm willing to buy 100 shares of SPY on November 14th. That's all I'm saying. That's it. That's simple. Look, there is nothing else complicated about this. All I'm saying is I'm willing to buy 100 shares of SPY on November 14th at close. And guess what? I can name my price. At the time of me recording this, SPY is trading at 672. Well, guess what? I get to say, you know what? What do I want to buy it for? Do I want to buy it if it's trading at 665? Do I want to buy it at 660, right? And depending on what I choose, I will collect an income, a premium income from an options buyer. Hit the juice button. You see it back there, right? That is going to be income that I am collecting from the market. So just for simplicity, let's do the 665 just to show you, and we'll go a little bit more granular here. Obviously, when we click into this, we would collect $300 and let's just say $330 of premium, right? for one contract. Now, every options contract is equal to 100 shares. So if I did this trade right now, I would lock up $66,500, okay? I would lock that up. That would be locked up till the 14th. Why would that be locked up? Well, because your brokerage and everything I do is covered or cash secured. I don't believe in all these strategies that put you in a tremendously financial risk. So I'm locking up $66,500 because let's say on the 14th at close, SPY is trading at 665 or below. Well, guess what? I got to buy it. So my money's not going to give it back to me. I'm going to be given 100 shares of SPY. Let me show you. All right. So right here, let's just say $330. I'm going to toss this into this is called a cash secured put. So I'm collecting $330. I'm locking up $66,500 and I'm getting a point. Oh, hit it right on the head. That's exactly what I didn't even, you guys know I don't script things, but I'm personally going for a 0.5% a week return on my collateral. That is going to be my goal in my retirement. Times that by 4, we're getting to around 2% a month return on my collateral. That's a little bit aggressive. Sure, we can even say that's a little bit aggressive, but that's what I'd be aiming for. Usually 0.5% on my money. So with that said, let's say we're playing around with this, 400K. How many contracts can we do? Well, we can do just that. Oh, hit it right in the head again. Around 6 contracts. That means I'm willing to buy 600 shares. Now, for this week of me locking up this money, right, I would collect just around $2,000. This $2,000 would be delivered immediately into my brokerage account, given to me, and I can use that money. I can reinvest that money if I want to. I can take the money out. I can do whatever I want with it. But let's talk about the risks of this strategy, because my $400,000 is wrapped up for 6 days till next Friday. So let's talk about what those outcomes can be. First and foremost, best case scenario, I don't look at it that way, but best case scenario, let's say SPY is trading above 665. It's trading just at 672 still, or maybe 680, whatever. It's above 665. Perfect. Your 400 grand is given back to you, right? And you don't have to buy the shares. All right. The second thing that can happen, and this is the big risk, is let's say at close on the 14th, right? It's SPY is trading below 665. It's trading at 664, 663, 660. You're buying your shares at $665. So you have to understand that is the big risk. You could end up that 400 grand could end up having to buy those shares of SPY. Okay. And now you have 100 shares of SPY. Okay, that is the biggest risk. And I know some of you will be asking, all of my calculators are free and my trade log as well. You can download all this stuff for free for yourself. Second link in the description of today's video. It's also a 2-hour-long training on our Ark Options Strategy. You're going to want to jump in and watch that. I'm obviously giving you a high-level overview on a YouTube video, but if you watch that Ark Options Strategy, down below, it's about 2 hours, and at the end I give you all these calculators. Okay, so that is the biggest risk of this strategy. Now, what happens if we have to actually get assigned our shares? Pete, now what happens? Well, this is why I would primarily be doing this on SPY, right? Because SPY, right, obviously, right, if you don't know, if I go max, has always recovered. It has always come back and hit all-time highs. And in my personal thesis, I'm not a financial advisor. Do not listen to me. You're probably going to lose money. I believe SPY will always hit all-time highs again. Now, past performance is not indicative of future results. We've had downtrends where we end up, down for a while, and then it takes a while for us to recover. We saw that, here. Look, like when we saw the drop in December 2021, right? We dropped, and it wasn't until a year where we kind of recovered back to where we were. But we recovered. That's the point I'm trying to make. Now, if we don't recover, I believe we'll have bigger problems. But with that said, that's why I like to do this on SPY. I don't mind holding SPY. Why? Because I'm getting diversified. I'm getting a full diversification in this. Plus, I get to do something called a covered call with my 100 shares. Now, if I do a sell, not a put now, if I do sell a call, right, and let's say I go out to that same date, November 14th, let's say I bought 100 shares of SPY at the current market value. Let's say you went out there and you just bought it for $670 for, 672. You bought 100 shares of SPY at 672. Well, guess what? We can put those to work in the same way as our cash to make more premium, right? Now, by the time in my retirement years, I'm probably going to have many, many thousands of shares of SPY that I can just easily do this on. I'm obviously giving you as a very simple education educational example, right? It's not going to be so cut and dry like I'm showing you. But with that said, let's say for the following week, I'm like, you know what? If I bought it at 672, if it's trading at, 675 for simple math, right? I'll do it. I'll sell my shares that I bought at 672 next week for 675. Now for that, I would collect we'll just say $430 of premium. All right. That's $432 of premium. Now, again, I'll go to my cover call calculator. Again, you can download this, second link in the description, and you'll get the training with this as well, completely free. $432. Strike of option. That means what I'm willing to sell my 100 shares for. That's $675, right? $675 is what I'm trying to sell my shares for potentially, right? My purchase strike price is my average cost basis of the stock, or ETF in this case, is $672. And you can see my premium return is a little bit higher. It's a 0.64. How I'm getting that premium return? I'm dividing my premium by $67,200. That's how I'm getting my 0.64% return in a week. If I end up selling my shares, I get $300 extra because I bought them at 672. I'm selling them at 675. Total profit on this specific trade, if I sell my shares, is 732, and that's just the profit plus the premium. Let's talk about the risks on this side, okay? First things first, right, is that, let's say, best case scenario, next Friday rolls around, and SPY is trading below $675. Well, it's not trading at $675. That means you don't have to buy your shares, right? And your shares are returned back to you by your brokerage. They're not sold. And guess what? You run the play for the following week, and you guessed it, you collect some more premium, okay? The second thing that can happen, and this is the biggest risk, right, is that, let's say, that following week or that next week, this at a close, let's say SPY is trading at like 676, 680. You're selling your shares at $675. You have defined your maximum gain here. Okay. So instead of getting your shares back, you're going to get $67,500 back. And guess what? For the following week, we then sell a put saying we're willing to buy 100 shares at a certain price and collect more premium. It's my favorite strategy of all time, and I believe it is my mission now to share this strategy with as many people as I possibly can. So if you want all of my trade logs, you want my calculators, click that second link in the description of today's video. You're going to get a 2-hour Ark Options Strategy training along with it, guys. And remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.